Okay, thank you guys so much for joining. Let's get straight into the webinar for today. Welcome back, each and every one of us. Thank you for joining the webinar for today. Like I said, my name is Ifere Rion, and I'll be introducing myself better as we move along. And as always, how we like to do it is first start out with some headliners to our PowerPoints to help you understand what the conversation and what the topic is going to look like today. Today, we're going to be talking about sessions and timing in trading, okay? We're going to be discussing how to use Forex sessions to make better entries. And a lot of times people do not understand how important sessions are because they don't really put it into consideration. And I'll be explaining to us briefly why sessions are important when it comes to trading the foreign exchange market. Our guest speakers for today are Emmanuel and Elisha Kpeji. Emmanuel is a Forex trader and the founder of 123 Forex, while Elisha is a Forex trader and the founder of KingsFx. Those are their academies. Okay, so do well to check them out and search for them. So my name is Ifere Rion. I'm a market analyst at Valetax. I help traders escape confusion with clarity. And by the end of this month, I would finally be able to say I have 6+ years financial market analyst experience, and I've been a trader for this period of time. And today I would be your host, your tutor, your educator, and also an analyst to help give you clarity where confusion lies in your trading. Okay. And I want you to meet our guests for today. We have Elisha, who is the founder of KingsFx, and we also have Emmanuel, also popularly known as Skubi, the founder of 123 Forex. They will be sharing insights and also answering questions for us today to help us understand better the importance of sessions and how to make use of them while trading the foreign exchange market. Unfortunately, I got a message earlier this morning from Elisha. Due to unforeseen circumstances, he would not be joining us, but he's taking his time to cover up for that by sending in a video showing us how he approached the market using sessions, liquidity, and a couple of other things alongside market structure to make better entries and as a form of confluence. But with me right now on the call, I can see Skubi on the call, and I would like to call on Skubi. Skubi, if you're available, please just say hi. And I would love for Skubi to just briefly introduce himself in about 1 to 2 minutes before we head on with the call for tonight.
Okay. Thank you, Rion. Good evening, everyone. How are we all doing today? I'm hoping we're all great. Well, Rion has said everything, but then everyone knows me as SkubiiFx Skubi. I've been trading for, I think by the end of this year should be 5 years now. And yeah, I own 123 Forex, and then I'm a tutor, and then tutor and mentor here at Happy Forex Academy. So yeah, I think that basically summarizes it. Yeah, there's nothing more. Yeah, just that. Yeah, actually. And honestly, it's a pleasure having you guys on this session today.
All righty. Thank you very much, Skubi, for that quick introduction. So let's get right into it, okay? What we're going to be looking at next is why sessions matter, okay? So I'm just going to give like a brief intro to help us understand what sessions really are. We do understand that the foreign exchange market isn't just charts, candlesticks, or lines and trend lines and channels or whatever kind of technical analysis, but the sole core, the center of the foreign exchange market is as a result of transactions that happen daily in the financial world, be it between countries, be it within a country, be it businesses, multinational, transnational companies, hedge funds, brokerage, and all of these people make transactions on a day-to-day activities. Now, just like every other corporate work, a corporate job, the times where people go to work, the times where offices open, and there are times where offices close. So because a majority and bulk of the transaction that happens within the financial market or within the financial system literally has to go through the banking system. So nobody has money in cash and transact it in the financial market. It has to be done digitally, through these banking systems or banking operation models. Now, it simply then means that when banks are not open, a bulk of the transactions that would want to be carried out cannot happen. So take it this way. In order for you to be able to carry out huge amount of transactions, you need activity. You need to make sure that the people who would be able to fulfill these transactions are open. Aside just the banks, we also know that hedge funds and other multinational and transnational companies wouldn't be carrying out activities outside of operation hours. Now, secondly, retail traders would also not be able to a bulk of retail traders would not be able to carry out transactions when they are asleep. Rather, they would want to carry out transactions, or they want to place trades when everyone is awake, is active, the market is flowing, the market is more liquid and volatile. Hence why sessions are important. So a bulk of the movements you see in the market are happening as a result of the availability of liquidity present in the market and volatility present due to the activeness and flow of transactions and fulfillment of operations from banks, the hedge funds, to multinationals, even to retail traders like you and I. So hence why sessions are important. But now you see that I put a catchphrase under this, and I said retail traders chase price, smart money creates or anticipates them. Now the reason why I put that there, we're going to get to it eventually, because it's one of the reasons why applying sessions to your trades do not just only help you make better entries, but also help you avoid being, liquidated from the market before the initial move happens. Okay, so market sessions create natural volatility cycles. Market sessions create natural volatility cycles. This is because of the activity that happens, the availability of players in the market. Okay, liquidity shifts within Asian, London, and the New York session, which means that the Asian session has its own availability of liquidity. The London session has the availability of liquidity, and the New York session is the most liquid session. Why? Because a bulk of money in the world, banks and everybody, even countries as a whole, have a bulk of their foreign reserves and investments in the USD. So when the New York bank is open, which is the biggest exchange floor, which is the New York Stock Exchange, and they have the biggest banks in the world as well. You have JP Morgan, you have all of these people as well. They carry more liquidity and carry out more transactions. We have hedge funds. The biggest hedge funds in the world are in the US. So these people carry out more transactions, therefore making their session more liquid. And that is one of the sessions where a bulk of people around the world are still awake and active. Europe is active, London is active, Africa is active, part of the Middle East is active, Asia is partially active, okay? But the New York session is the most liquid session. Now, timing trades reduce noise and improve precision. So meaning that if you focus on understanding what sessions you like to trade, then you can have a better strategy to work around it. And then there is a system that applies generally to the market, where we talk about the Asian range, the London manipulation, and the New York reversal or the New York continuation, which is a standard of how the market moves. So we believe that the market accumulates during the Asian session due to low level of liquidity. During the Asian session, New York is asleep, Africa is asleep, Europe is asleep. Just part of the newfound land, which is New Zealand and Australia, is awake, and Asia is awake. So the liquidity level in these places are a bit low, despite the number of possible traders that could be existing in Asia due to their large population. But the banks with the most liquidity and transactions are still asleep. So hence why the liquidity is a bit low. But from the London session, we start to see liquidity come into the market. Why? Because we have some of the biggest banks too as well, and we have the London trading floor open too as well during those time. And we start to see Europe open with the Frankfurt session and moving right into other parts of Europe like Norway and the rest as well also wake up at that time as well. So this is why sessions are very important when it comes to trading, because if you're trying to trade a certain pair, let's say for instance, Euro USD would probably most likely not move as much and not carry so much liquidity or volatility during the Asian session as much as it would during the New York session or the Frankfurt session as well. Okay, so sessions help identify liquidity grabs and clean entries. So it means that during sessions, we can see where a lot of people were trying to force trades. We expect market to sweep the liquidity and then finally use the liquidity to fuel prices to the direction in which they were supposed to go to. Okay, so next thing that we have is the major Forex sessions, which I feel like is the base of every beginner trader here. So we have the Asian session, which is low volume range creation. Because of the low volume and low volatility, most times the market would range. Then we have the London session, which is where volatility comes into the market, breakouts and liquidity sweeps start to happen. New York session usually would come in with the continuation or reversal setups, while we have the overlaps. So now overlaps are the time where a session is closing and another session is opening. So we usually have the Asian session overlap the London session. So the close of the Asian session overlaps the London session. The close of the London session overlaps the New York session. And the close of the New York session slightly overlaps the Australian session or the Sydney session. Okay, so during those times we have like more liquidity, and then sometimes we have like very impulsive moves happen at that time because London might be wanting to finalize their trades for the day, and New York is just opening. So at that point in time, they have more liquidity to be able to fulfill transactions that they were not able to fulfill during the London session. Okay, so banks carry out a bulk of transactions if they are not active. Who's moving the liquidity? That's the question. And that's what I want you to keep in your mind today. At the end of this call, I want you to always carry it with you. If banks carry out a bulk of the transactions, if they are not active, who's moving the liquidity? Okay, always keep that in mind. So ask yourself that question. So whenever you're in a trade and you feel like, oh, the trade is not moving in your direction, wait and see. Is there a possible session that is coming up? Are you approaching the London session? Probably you took a trade during the Asian session. So you now want to look at your chart again and wait and say, okay, the London session isn't open yet. Frankfurt session isn't open yet. Okay, so let me wait for this session to open. And that's why it's very important that I always tell people the close of the 4-hourly candle is a very important candle, because at every 4-hour candle, a new session is most likely to open. So we have the London session open at 8 a.m. African time, which is Nigerian time. Okay, pardon me. Then we have 4 more hours, okay, from 8 to 12. And then we start to see startups and kickoffs for the New York session. If you add another 4 hours to 12, then you finally get to the New York session. Okay, so 2 4-hour candles after London session brings you into New York session. 2 4-hour candles after the New York session brings you into Sydney session. 1 4-hour candle after the Sydney session brings you into Asian session. 4-hour candle from the Asian session does what? Brings you 2 4-hour candles brings you back into what? Into the London session. So that's why it's very important. 4-hour candles are very important for me as well. So always keep that in mind. If the bank are carrying out these transactions, where then, if they are not active, where then is the liquidity moving from? So this is a simple step-by-step on how price action and smart money timing works. Okay, Asian range becomes future liquidity pool, meaning that any session that comes live after Asian session would most likely always want to target the liquidity resting in the Asian range. So during the Asian session, a lot of people FOMO into trades and try to make entries during low volatility hours and end up leaving their stop losses carelessly around this range. The London session comes in, sweeps, creates break of structure, returns to other block, and retest for opportunities. New York session would just come in, set a pose for a continuation, or engineer a reversal, depending on the direction of the market you're in and depending on the kind of structure that you find yourself in. And I believe our guests are also going to be touching on those things and showing us exactly how it happens. Now, timing aligns with structure, liquidity, and order block precision. So sometimes prices never get into your order block that you've mapped out, or your supply or your demand area. Why? Because a session has not really pushed prices there. So sometimes you might be waiting for prices to come into your order block or your demand area, and it would not happen during the Asian session. It would not happen during the London session. Most likely what's going to happen is the London session and the Asian session will just engineer more liquidity before the New York session does what? Sweep that liquidity, create the reversal, and then the order block facilitates the continuation to the direction in which you want your pairs to move to. Okay, so you have to keep that in mind too as well. Then, why smart money always manipulates prices before session is: one, they want to generate more liquidity. Two, they want to use retail stop losses as entries, especially the Asian entries. Three, they think in terms of liquidity flow and not just structure. A lot of retail traders just see structure and then we get excited. We get very, very excited when we see structure. Okay. Please, I want to make this clear that please we should desist from trying to draw anything on my screen, please, so that we don't distract others or confuse them during the call. So with this being said, I hope it's been easy for you to understand what I've said, and I want to give the floor to Scooby to kind of walk us around his chart processing and how he understands sessions and applies them to his chart, and then show us a few tricks up his sleeves and how you can take advantage of them as well. So Scooby, I believe you would be able to show us a few tricks around this, in less than 20 minutes, and show us how you apply sessions, liquidity, and the right timing to your trades.
Okay. Good evening, everyone. So I have can I share my screen?
Yeah, you can. I believe you can. You should be able to share a screen.
Okay. Okay.
So guys, sorry, before Scooby gets started, let me just quickly step in to remind us to always keep in mind, if you haven't followed Valetax, please do follow our official page, and remember to always be ready for webinars every month from Valetax. And if you're yet to have an account with Valetax, please do reach out to our guest if you're invited by him as an MIB to use his link to join Valetax and start trading with Valetax. We have the tightest spread on ECN for the lowest deposit. Unlike other brokers, they tell you to deposit $500 before you can use their raw spread account. For ours, it's just a minimum of 50 USD, 30 to 50 USD for the ECN account, and you can get very tight spreads on the ECN account. And we also have copy trading system that allows you copy trades of professionals while they are making trades, and you're also earning while they're doing that as well. We have a lot of offers on the Valetax website from bonuses and even contests and promotions. Should do well to always check and download the app if you haven't. It is very faster and easier. And don't forget to invite your friends next time you're joining the webinar so that they also can learn. Okay, Scooby, please take over.
Okay, so we're looking at Forex trading sessions. Forex trading sessions, and one thing we trade in is there are a lot of things we talk about. There are a lot of things that can be spoken about. There are a lot of concepts that people talk about. There are a lot of concepts that people make reference to. And I always tell this to my students and then people I meet and then talk to about trading, that it's not just about those concepts. It's about knowing how to use them to trade. And if you look at what our host has been talking about or has been hammering on, it's not just the whole idea of sessions, but then how we as traders can use these sessions to trade, or how these sessions actually affect trading. And it's very, very important. Anything you pick to learn in trading, you have to understand why you're learning that stuff. Now, when it comes to sessions, just like he said most of the stuff that I was actually coming to like say. But then if you look at the whole idea of sessions, if you look at the whole New York session, oh, one sec, why is this thing switching to read only? So if you look at the whole idea of the New York session, let me put it NY. If you look at the whole idea of London session, um, Sydney session, or sorry, Asian session, yeah, the whole, yeah, Asian session, that's the whole Tokyo session and then Sydney session. All these actually are based off of the times people around these areas not wake up per se, but then when they like get to the office, more or less 8 to 5 p.m. So what is the working time within those areas? And why this thing is important to highlight is because people that are around those areas, just like our host said, people around those areas, that's when they like put orders in the markets. Do you get? And one thing in trading is that we actually need price to move for us to be able to make money. As a trader, if I jump on any trade and then price is in one place, it's not moving up or down, I will not be losing money. At the same time, I will not make any money. So we need price to actually be fluctuating. Do you understand? And what brings about this fluctuation in the market is orders. Orders bring about these fluctuations. And what brings orders to the market is actually people. So when people are active around these areas and then they are jumping in the market or they are trading, actually brings about the whole idea of volatility in the market. And that's actually very, very important. Now, when it comes to the whole idea of using or how we can actually use Forex trading sessions to trade, it's not personally, it's I don't want to say personally, but then yeah, it's personally. I hold this whole belief that well, it's why I hold this belief is coming from this whole idea where people always recommend that if I have something like AUD USD, I should trade this during the Asian session or Sydney session. Do you understand? Because that's the only time that this currency pair would move. Personally, I hold the whole belief that now I, I don't feel you necessarily need to do that. I feel like anytime you see an opportunity on AUDUSD, you should take it. Do you understand? That being said, you should also understand that during this whole Asian session, Sydney session, we're going to have less volatility. It's just recently that we started seeing a lot of volatility, especially on gold during like the Asian session. Yeah, where gold is like pumping overnight. Do you understand? But then personally, I feel like if you see any opportunity in the Forex market, you should jump on it. Don't let it slide. Do you understand that sort of stuff? Now, if you're trading things like there are people that trade things like Asian range, there are people that try to like jump on the whole volatility that 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 the open of these sessions actually bring. So there are people that look to trade during the New York Open, London Open. Why? Because it's more or less like it's more or less like you've had people not, I don't want to say not active, but then it's like keeping dogs in the cage and then just letting them open the way they run out. Do you understand? That's how volatility comes in during these sessions. So when the London opens or the New York opens, there's that whole influx of volatility. So most people are always looking to like trade it. Do you understand? Because now price moves faster. Now, like I said, some people look to like trade. There's a way they trade like Asian range and all, but then personally, honestly, my trading system is not based off of it. My trading system is more or less, or the way I look at trading sessions. I actually like know that they're important. Do you understand? I understand that I understand the implications of trading during the Asian session when volatility is low would have lesser price movement, and then the whole trading conditions would be very, very off, where you have a lot of spread and all. So I understand that, and then that's on one side. But then personally, I don't feel like I need to actually wait till like maybe the Asian session to like trade AUD or let's say wait till the London session to trade something like Euro USD or GBP USD. You get. I hold that belief that um as long as you see an opportunity in the market, you can jump on it, but understand the implications of these sessions. So on one hand, understand the implications, but then if you see an opportunity, you can jump on it. So it's left for you to do what, I don't want to say what you want, but then what you should do should be based off of your experience in the market. So personally, like I said, I don't trade like the Asian session. I don't trade like the Sydney session, Tokyo session. I don't trade all that because I've lost a lot of money trading it. Do you understand? It's not based off of maybe someone telling me that, oh, don't trade it because there's no volatility. So you can go back, having the idea of the effects of these different sessions. You can look to backtest and then um try to use your trading system. When I say system, it's more or less your strategy across these sessions, and then see if there's anyone that affects your trading system. Then you should understand that you're not going to be trading them. But if you see that it doesn't really affect your trading system, then you can actually look to like trade your trading system or whatever currency pairs you're trading inside or within any trading session. I think that's basically the whole belief I have, and then that's how I implement it in my trading system. So the summary of what I'm trying to say is, first of all, these sessions are very, very important, and they are based off of the different times people are active at different parts of the world. And this is important because they actually bring in volatility. That's when people are active, brings in volatility, price moves up or down, they get. And when a session is not, when a session like maybe the Asian session, the Sydney session that doesn't have much volatility is active, you wouldn't see much price movement, you get. And when it comes to using this to trade, personally, I feel you should first of all backtest it. I don't want to say you can hear all the different consequences or effects from different people. Do you understand? But then I feel you should experience it, jump on your charts, and then test your trading system within these different systems, these different sessions. And if you see that it doesn't really affect your trading system, then fine, you can trade within any session. But then if you see that a certain session is affecting your trading, then you should look to avoid it or maybe tweak your trading system. I think that's just it. Any questions? Or I think there'll be a session for questions. That's going to be all.
Thank you very much, Scooby. Yes, please, if you have questions in any way, please just feel free to drop your questions in the chat section on the Zoom app so that we can, answer the questions during the Q&A sessions. Okay, with that being said, I also would want to share with us the video created by
Let me continue my match.
Hi guys, sorry, please, can I confirm that you can hear the audio from the video I am sharing currently from our second
The
guest?
audio is not available.
Okay. Just give me a minute, please. Okay. How about now?
Hi guys, my name is Elisha. Welcome to Valetax webinar hosted by Rion FX and myself as
Scooby, can you hear the audio now?
Yeah.
Yes.
co-host as well as Scooby. So today we're talking about trading sessions and how to get the best entries from this session. Now, I want to thank Ryan and Scooby for talking about what trading sessions are and the four type of trading sessions. So for me, I'm going to talk about a little bit more. I'm going to shed more light. I'm going to shed more light, a little bit more light on what these forex sessions are, their characteristics, the best pair to trade according to the session. Now, how these sessions influence the markets, right? Now, so first things first, Forex, what are Forex sessions? Forex sessions are basically a 24 hours market cycle that continue day in, day out, but closes at Friday. So basically, this sessions comprises of four major regions. Okay. You have the Sydney session, you have the Tokyo session. Sydney session deals with Asia and basically AUDs and yeah, basically AUD, NSDs and odd, right? So basically, these are the types of pairs that flow fast during Sydney session. Now, Tokyo session, this is where the Japanese yen, have full leverage in the market. Basically, you're seeing JPYs, ADJPY, GBJPY, USJPY, ADJPY, all of these pairs are most active. Now, one thing that is very, 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 sometimes very, very nice to see is that Tokyo and Sydney overlap. Basically, they occur at the same time. So pairs like ADUSD, NSDUSD, ADJPY, NSDJPY, they are very, very active during the session. You see them moving with speed, and there's a bit of volatility, but it's low, right? It's not very sharp compared to the big giants, but it's pretty low. Now, London session, okay, this is where big institutions come up, right? I live in London, so I'll be speaking from London time. So basically 9 to 5, by 7 o'clock, 8 o'clock, everybody's back in the office. And this is where these guys are pulling out big funds to basically move the market. You get a lot of volatility, you get breakouts from trades, your trade entries start moving. It's a bit more force to get into profit and everything. So basically in London session, you get the trade pairs like, GPUSD, Euro USD, Gold, GPJPY. These guys are they are moving, right? They have one of the highest volumes in the world and they are fast, they're aggressive. And, it starts from 8 a.m., right? 8 a.m., 9 a.m., basically 9 to 5, 8 a.m. Some companies will open by 8, some start by 9. But basically, when the economy starts, yeah, that is a big shift in the market dynamic. You start seeing a lot of movements, right? And the best to trade are GPUSD, Euro USD, Gold, and GPJPY. Now, why does London move the market? Now, UK and EU institutions push billions basically into the forex market every day. And this is not small money, right? This money has a tendency to make the market move in a certain direction. Dollar reacts to Asian price. Basically, Asian price is like when they are sleeping, stuff is happening. So when they wake up, they see Asian, I've made a certain decision, they try to match that or do more than that. So yeah. Now New York, right? New York is, New York overlaps with London and they are like big giants and their news have a lot of power, what's it called? NFP news, FOMC news, core CPI. Now they just create sharp, very sharp movements, right, in the market, particularly when it overlaps with London. And you see big trends, continuation, reversals happen, and you see high liquidity, and all of these things happen during New York session. Basically, the best pairs to trade are similar to London session pairs, gold, US 30, NAS 100, basically USD pairs, USDJPY, Euro USD, these guys move a lot during these sessions. Now, the characteristics of the New York session is the fact that if you're in profit before, you might go into more profit like TP hits, or you might get massive reversals. So basically, if I'm trading from London session, if I'm in profit in London session, I like to close out before New York opens because chances are that price could reverse on me. Okay, that's basically majority of the time that's basically the case. You see massive reversals and yeah, it kind of hurts. So you get what you can, you close on what you can. But sometimes when my trade does not trigger during low session at all, I don't panic because I know New York is going to come with something good. Now, when New York opens, you tend to see a big shift. Basically, price was going into a profit before they left you. Chill. New York is going to open. You see big reversals. Price will tag you in that you weren't tagged in during London session. and you go into profits. Get what I'm saying? So basically, when reversal happens, basically those who are in profit already in London going up, New York can open and put them in reversals, tag you in. You know, it's a cycle. Like it plays around, and it's basically due to its news, high impact news. You know, you see a lot of these things happen. And if you really trade US 30, NAS 100, you know, all of these CFD pairs, actually stock pairs, you will see big shift. Like one candle could just go wow. So one candle could just move, you know, and yeah, that's the way it is. Okay. So now what I'm going to finally show you is basically in the charts now what they look like. Although it's a bit hard because it's not really happening now, okay, compared to before, but I'm going to try my best to see what I can grab for you. But yeah, we'll see how it goes. We'll see how it goes. So yeah, so now you guys are seeing my screen. I'm gonna, yes, so you guys are seeing my screen. I'm gonna use key areas as an example. This is 30 minutes time frame gold. Let me go full screen first. All right, so I'm gonna go on 1 hour time frame. I'm gonna go full screen. Let me turn on indicators first. So I'm gonna see what I can do my best. I'm gonna see if I can give you guys an understanding of this whole session thing and the difference it has in the market. So yeah, so this was what this whole movement happened was on Friday, right? It was on Friday. So this is, if you notice, before now, gold was bullish. Okay, gold was bullish, was making this is a lot of noise, but I'm gonna see how I can just give you a bit of understanding. Now, if you notice, London, this was Asian session, right? The move that happened here wasn't so big. The move that happened between Sydney session and Tokyo, Sydney and Tokyo, they overlap. You get what I'm saying? Now, if you notice, the move that happened between Sydney and Tokyo wasn't big. Now, with London, you see big move, boom. And with New York, if you notice, London made a very big, okay, not so big of a move, yeah, but it started making big move as soon as New York came into play. If you notice, there was a very massive move all the way to the evening. Now, Sydney session is slow, okay, low volatility, and London came in, you can see the downpour, right? You can see the downpour, and with New York, it kept on just like that. So basically, you can see that now when it comes to Asian session, there's a bit of a hold up. If you notice, the moves are small. London, big move, boom. New York, big moves again, boom. Sydney session, small. London, boom, big move. New York and London, boom, big move. Get what I'm saying? So basically, if you take a look at these sessions carefully, you notice between Asia and Sydney, the sessions are really slow. And this is basically after 5 p.m., right? After 5 p.m., you know, London closes by 5 p.m. New York stays till like 8 p.m., right? But from that time, let's take a look at it. Let's take a look. Hold on, right? It closes by, yeah, 10 p.m. 10 p.m. Yeah, New York closes 10 p.m. Right? I've noticed from there, it's a bit slow. It's not really much movement. And a few times here, we see London and Tokyo make giant moves, but this was basically on Sunday/Monday. So it had a lot to do with the new weekly candle opening, right? So yeah, so basically these are the kind of things you see. Now, what makes, for me, I find Sydney session difficult to trade because there's a lot of liquidity grab. Let's say you could be buying a trade here. If you notice, like, let me take this as an example. The whole of Monday, gold has been buying, right? Gold has been buying. At this point, you want to think, oh, if you're over trading, please don't overtrade. If you traded London and New York session, I think that's good for you. Okay, these guys, they start by 8 o'clock in the morning, right? London starts by 8 o'clock in the morning and they finish by what 5 p.m. This is 4:30, but it's basically 5 p.m. They close, they go home. Now, these guys bring billions and you know they do more than you, but they close and they go home. New York come in, they close and they go home. You've traded this decision is enough. If you try to now trade 24 hours, you are bound to hit losses. Okay, less is more. You're bound to hit losses. And if you notice, if this guy, you think this guy was gonna keep buying because he has been buying all day. What happens? Boom, stop loss hit. Get what I'm saying? Stop loss hit. And now it's buying. You're gonna think, oh, it's buying now. London comes in, boom. So basically, there's nothing good trying to pick an entry. There's nothing good trying to pick an entry during sessions like Sydney and Tokyo. Now, there's a lot of people who, you know, who have been in this situation for a long time, and they've developed strategies to trade Sydney sessions and Togo sessions in this crude way. You get what I'm saying, right? In this crude way. I'm not that much of an expert. I try to trade just London and New York. Okay, I'm not that expert on Sydney session and Asia session. I find them relatively slow, too slow for my liking. London and New York, boom, lovely, right? But those who come to trade at night, you don't trade for long. You tend to scalp, right? They pick a trade real quick. I don't scalp. I like to trade and catch the big moves. That's where my area of expertise is. Now, if you look carefully between the Sydney session, right? Let's try to analyze a couple of markets and see where it went wrong and why it went wrong during these sessions, right? So I'm gonna key in on, let's say, 15 minutes. I'm gonna break it down even further. 15 minutes, right? Oh yeah. Let's bring out some sessions in here. Now, in normal category, right? Those who try to trade Asian session, this is Asian session move right here, man. So I'm going to try to analyze a couple of trades for you and give you guys some context to, if you try to trade it like at that time. Let's say you saw something like this happen, you're a bit interested in this trade, you're like, oh, okay, it's going to sell long term because at this point, sorry, let me bring like 18 minutes. Let me bring like 18 minutes, right? I want to bring it into the higher time frame. The reason why I'm doing this, I want to shed more light on the fact that of the structure of the market at the point in time. So basically, what can we see here with gold? So basically, gold made a break out of this level. So this is a key support and resistance level for gold, right? And this also is a key area as well. Okay. So basically, at this point, we're gonna see some things here. At this point and at this point. So sorry, I'm taking too long. Forgive me. I'm just gonna use this as an example. There's two examples, and I'll call it a day. We're gonna dive to the 15 minutes one more time. All right, I'm gonna dive to the 15 minutes one more time. So basically, this level was a very key level. You can see that what's it called? Gold bought above this level, and people expect gold to keep buying, even if it doesn't buy. Some people might expect some sells here. It's 9 time, whatever the case is. I'm going to show you a couple of failed trades. That's why I really don't like this session. Okay, I try to avoid and wake up in the morning and try to trade in the morning and in the afternoon, and that's it. So somebody might see this as a break and retest, like gold wants to sell down, right? Basically wants to sell down on this support and buy more. They might think that way, but the minute they try to jump in on the trade here, call a sell. Basically, let's say they even try, like they make the effort to watch the market move continuously, right? They've gotten the confirmation and they've gotten an entry from, let's say, this other block level here. Okay, you can see they could wait, price basically trigger them in. They'll say, oh, they're in profit. And after a while, you're trying to look for sales. What happened during the Asian session? Let's see what happens. Boom, stop loss hit. If you look for sales here, stop loss hit. You get what I'm saying? Stop loss hit all the way. And let's say they're like, oh, since it hit stop loss, we got to break out. Now, this is where it gets tricky. Now, they might think, right, fine, since we hit stop loss, I'm not going to bother with it. I'm going to do a breakout and retest here, right? Price breaks out. They start buying, right? They start buying, they're in profit. They start buying. By the morning time, when London comes in, this is London, yeah? Basically, this is London overlapping with Tokyo a bit. Now, boom, there's a crash. Let me not use here as an example. Let me pick another area of example one more time to give you a bit of context over this as a whole. Now, this is what we call seeding session all over again. Basically, we see gold make giant moves. This is a high, this is a low, this is a high, this is a low. I was caught in this as well, bro. I was caught in this as well. I'm not gonna lie. Basically, gold has been buying all day, and price pull back down. You're gonna expect price to buy, because it's been moving at that incredible speed with little to no pullback at all. Based on that momentum, some people might say, okay, this is a good trade. I'm gonna buy it now, and they're gonna buy from here. It's not like it's a bad initiative, right? Just that when it comes to Sydney, you might go into profit for a bit of time, and you go to sleep, you're in profit, you're sleeping in profit. But Monday when you wake up, stop loss hit. It's always like that. You see a trade at 9, you take it before morning, stop loss hit. It's always like that. So if you take a look at this more, okay, you try basically it's an opposite of what anything Asian is going to give to you. So you have to keep a sharp mind and approach price during the London and New York session, right? So I can't give you too much examples because of time, right? But try to do your assignments based on what things we've said. Try to approach this sessions cautiously. You will see that there's a lot of things that we've said are right about the sessions. And if you look at the pairs, you will see how the pairs react based off these sessions, right? So like we've said, Asian pairs, AED, JPY, all the rest, because it overlaps with Tokyo. So you get all the AED, JPY's pairs moving quickly fast. London, GBP, USD, all of that. Then London overlaps with USD sessions. So basically get Euro, US, GPUS, and all of that. So these sessions are very important because if you get a good trade during these sessions, you can see massive movements thereabout. Now, like I said before, Asian sessions, Sydney and Tokyo are Asian sessions, right? Tend to move slowly because they're a bit low. They're not as powerful as the pound, the euro, and as the USD. So yeah, that's all I have for you guys. I'm very grateful for turning up tonight. Yeah, so welcome to the webinar. I hope you learned something. I'll see you guys next time. Bye.
Thank you guys. Thank you to Elisha for being able to, make that quick recording for us to be able to, explain these things to us and how he views the market when it comes to session. Because always, we try to want to keep these webinars on the time. So what I'm going to do right now is I am going to give you guys like a very quick input on how I analyze the market when it comes to session and apply a bit of smart money to it. So pay attention because I'm going to do my best to make it as comprehensible as possible and very quick. Okay, not extremely fast, but very quick. So I'm just going to open up my charts now, guys. So watch, look, and pay attention carefully. Okay. Okay, what session indicator did he use? Okay, I would put that trading indicator session for us. Okay. So I want to believe that we can see my charts. Okay, so this is the chart on BTC USD. So what I'm going to do is I'm going to go to I'm going to use gold. Okay, I'm going to use gold for this analysis. It's FXCM. Okay. So let's use Forex.com. Okay. Okay, guys. So the indicator that he was using is called. Are you guys seeing? Okay, it's called Sessions by Lux Algo. It's called Sessions by Lux Algo. So just take a screenshot right now. It's called Sessions by Lux Algo. Okay. The name of the indicator is Sessions by Lux Algo. Here, this is what it looks like. Okay, so I'm going to take out the indicator. I need it sometimes I don't need it, because when you've stayed on the chart long enough, you literally would have like a muscle memory when it comes to timing and everything. Okay, so what I want to do for us right now is I'm going to use a period separator. Okay, so don't get worried when you start to see a lot of lines on my chart. It's literally just a period separator. Okay, so I'm going to turn it on now, and we're going to see a lot of lines on my chart. Okay, these are the pin separators. Why is it not on? It's supposed to be on. Creating and Yep. So what you're seeing right now is called a session separator or day separator. So what it does is separates every day. So this is Monday, this is Wednesday, this is Tuesday, sorry. Then this is Wednesday, this is Thursday, and this is Friday. Okay. So when you're in, we literally trade using the London session. Okay. So what you want to pay attention to right now is within this period in time, you get the complete session. So this is Sydney session. Okay, this is Sydney session through Asian session, through London session, and New York session, all happened within this day. So what you want to do is take out this day here, okay, and study it. So we're going to go to like the 5 minutes time frame where this becomes even bigger. So now this is the whole move that happened within that session. So now what you want to pay attention to, okay, while you're using these sessions, the number one thing, take your notes, take your jotter. The number one thing you want to pay attention to when you're trading sessions is first understand the direction of the market. I would never underestimate the direction of the market for us, okay? So you then want to look at the direction of the market. Always start from the higher time frame, okay? Always start from the higher time frame. From the higher time frame, we had a previous target, okay? Here, we were expecting prices to come into this previous neckline that was created, okay? So we knew exactly that we had reached a point of interest. A point of interest basically is any key level in the market can be referred to as a point of interest. It doesn't have to be a supply order block or a demand order block. For as long as it's a key level that you're looking out for, it becomes a point of interest to you. Okay, so this was a point of interest. Now, since it became a point of interest, now you would slow down when it comes to the buys at this level. So what do we now do now? We go back to the 1 hourly time frame. We see that during the Asian session, prices led into this point of interest. So we come to our 15 minutes time frame. So now, remember, we've studied the higher time frame first before coming to the lower time frame. That's why it's important that as a day trader, you pay attention to the higher time frame and get your overall directional bias from your higher time frame. Then you can then scale to your lower time frame and then play along with the market structure from there on. Now, when we look here, okay, for instance, we see that this was the Asian session here. So automatically this becomes the Asian low. Okay, so this became the Asian low here. So this was where Sydney moved, and then the Japan market and Chinese market opened up, and they rallied prices up into this point of interest. At this very point of interest, this was where London came into the market here. London came into the market at this point here. Okay, and what did London do? A lot of people were already trying to sell off during the Asian session here, right into Frankfurt before London session opened. So what did London session do? London session did what? Swept the liquidity, broke structure, and continued to move to the upside. London session stayed within this level up until the open of the New York session at this very highs here. This was where New York session opened up. But mind you, the open of the session doesn't necessarily mean the open of the bank. So take, for instance, we wake up at averagely at 6 a.m. London time, right? But that's not when the banks open. The banks open about 2 hours later. So in Nigeria here, work and operations start up at 8 a.m. in the morning. So banks open at 8 a.m. in the morning. Even when banks open at 8 a.m. in the morning, do they start carrying out transactions? Not fully. Maybe the front desk for people who want to make withdrawals, deposits, complaints are open. But at the back end of the people who are doing the bulk of the transactions and trading are not fully open yet, up until probably like 8:30, 9 a.m. So similarly, the same thing. New York wakes up at about 1 p.m. our time. So a lot of traders wake up in the morning, probably go for their morning jog, do all the necessary things, and then they head to their chart. When they head to their chart, they start to analyze the market and spot out possible liquidity that has been hovering or lingering in the market to want to target those liquidity. The New York Open, which is now the New York Stock Exchange Open, where trading activities then begin, start at about 9:30 New York time. And 9:30 New York time then becomes 3:30 our time. So you see that's about what, 2 hours to 3 hours time difference from waking up to when activities start to heighten. So that is the peak of the New York session. So now we saw one for 2 o'clock start to bring the sellers into the market. Now, what did we notice first of all was that the lows during the London session at the peak of the London session here, before these other highs was created, was finally swept. So we started to see a shift in this structure from the Sydney session. So you see that the Sydney session was already bullish. So when New York opened, the first thing we saw was it started to shift structure. Not only did it start to shift structure, but right before trading activities heightened, okay, midday of the New York session, a reversal happened, which was a correction back into a key level, which was this key level from the close of the New York session the previous day. So prices came back to retest the levels from the previous day when New York closed. And then we started to see the sales come into the market. Where did the sales target? The sales didn't just target anywhere. It targeted where? The liquidity that was resting from the buyers. Remember when the day started at the Sydney session, everybody was buying. So it means that for people who didn't pay attention to this point of interest on the 4-hourly time frame, are still holding their buy positions that they entered from where? From the Asian session. It means that the Chinese people, okay, who entered this trade, or the Japanese people, or the intraday traders or the swing traders that made entries at this level here during the Asian session and have gone to sleep, all have their stop losses were below this level or probably at break even. So what happened first? They took out the break even positions before finally sweeping out every possible stop loss that was existing around this level. So now you understand why we say that the Sydney session is usually a massive area of liquidity that is always targeted by by prices in the market overall. So when I turn on my algorithm, this thing now, can you see exactly where this happened during the Sydney Tokyo session? My timing is not correct for this thing. That's why it's a bit messy like this. But you get my point. So you see that this range was where the liquidity was resting, and what happened? Prices swept that liquidity before going back to the upside. Sydney session also did what? The following day, Sydney session did what? Trapped the liquidity again. And when these sales happened, what happened here? London session did what? Sweep the liquidity to the downside. Now, remember, I also stated that the New York session always brings in a continuation or a reversal. So you see London come into the market right here, and then just at 3:30, when it became the peak of the New York session, what happened? We see the reversal come into the market New York session before these minor sales that happened. So all these sales happened during the London session, the open of the wake of New York. So the wake of New York saw sales happening, and then people who identified the sales coming from here quickly ran into the market to try and enter positions. And then what happened? When the open of New York happened, it did what? Reversed and took all the FOMO sellers out of the market. So we had the New York reversal come to the market. Why did the New York reversal come into the market? It didn't just happen because it was New York reversal, but it also happened as a result of what? As a result of a point of interest. So this is when you go to the 4-hourly time frame, you see this level. This level is what? Is a point of interest. Why? It has been this was where the range was holding for over 2 weeks at this level here. So from October 27th all the way to November 10th, this level held as a very strong resistance. Hence why the reversal happened at this point in time. So it's not just about trading the sessions, but it's about pairing them with key levels. Your support, your resistance, your demand, your supply, your points of interest, whatever the case may be. So when prices approach your point of interest, sessions can trigger them even better and faster. So let's take, for instance, you were waiting for prices to get to this level, and prices didn't get to this level up until New York session. And then when prices got here, what happened? Prices rejected at this level. So you see that your point of interest reacted perfectly fine or perfectly well with the timing of the session. So there was enough volatility to actually push prices out of this point of interest. Hence why we got that reversal at this point in time. And it was a valid reversal because this was a broken resistance that finally became what? Support. And what happens at the support level? Reversal. So that was exactly what happened here. So it's about understanding fully how the market operates technically and then using this knowledge to apply to it. So if you had this place as a point of interest and you see that New York session came with aggression and finally touched this level, now you can then try to want to buy at this level and then you can limit your risk. Why? Because you know that New York usually is a reversal, usually brings in the reversal, especially when London session has been selling. So if Tokyo, London sold, you expect that New York should bring in some sort of reversal. But it's not just entering the reversal during the New York session, but confluence is what makes your trading better. So you now need to find a point of interest to expect that New York should keep flowing prices back into that point of interest before the reversal happens. So a reversal cannot happen without a reversal point. So you need the reversal point to be present. Then you apply the law of sessions, which is New York session most times will bring reversal. And if the trade was the opposite direction, for instance, if the trade were to be, if this point was to be like a continuation, okay, if this point was to be like so for someone who was trading the buys here, okay, this would be a continuation entry for him. So New York session brought the continuation entry for him to place another trade, which is a good continuation point, to be very honest, because we had a break of resistance becomes support. So for someone that was selling, this would be a reversal. For someone that is trying to buy at this point, this would be a continuation. So now you understand why I said it brings reversal and continuation to the market. It all depends on what side of the market exactly you're on and where you're viewing to take your trade from. So if I was trying to buy because I had a break of resistance becomes support, this would be a continuation trade for me. So New York brought me to my entry and I placed my entries and my continuation has started. For someone who was selling, this would be a reversal point for him because he's not trying to lose, profit. But at this point in time, the reversals were meant to happen for the sellers. You get to it all is about the direction of the market that you're on at every particular time. And you see how prices reacted here. That is exactly what happens. Now, for me, that is identifying that this is supposed to start off a long-term sell, even from the daily time frame. Yeah, and hoping that prices would eventually break these levels. And I'm wanting to see if this level would hold properly. I'm also going to be looking at the 4-hourly structure, okay, that has started at this point. Okay, so when I go to the 15 minutes, I see that we now have a shift in structure. We've taken out this bias. We've also taken out the bias from this level as well. We also have prices at this key level here, respecting here, as well as a good retest. Well, I'm expecting prices to come a bit higher. Why? Because I had the first bullish break of structure, the first bearish break of structure after those buys happened here. So I'm looking for prices to pull into this other block here. So I want to see prices take out these sellers that came in during the New York session here towards the midday of the New York session here, were trying to just, enter the market. And a lot of them were held this straight to the close of market Friday. So a lot of stop losses possibly is residing above these levels. So what am I now looking for? That the open of Sydney session could most likely take out these levels before selling, or sell a bit, still leave the sellers here and engineer more sellers into the market. So a lot of Asian sellers will come into the market, probably create like some sort of double bottom at this key level again, okay, before we now get, London session come and hunt those liquidity, and then we see New York session sell off the market. Now, prices might not come into this level tomorrow. It could be the whole of tomorrow would range in this area and slow movements and everything before the following day New York session comes into this area and bring in the continuation or the reversal, depending on the direction of the market that you're in. And I hope that makes sense and you understand how sessions apply to these things. And if this makes sense to you, feel free to come back and watch this video on YouTube, and feel free to always ask questions. You could ask whichever of the hosts invited you, whoever of the guests invited you, or you can come directly to me as the host as well. to help you, understand better these sessions. And I might just do another video on sessions that will be uploaded on the Valetax YouTube channel. So head to YouTube right now on the call and go and subscribe to Valetax YouTube channel if you're on the call, so that you can catch up to this video later on. Okay, and that brings me to the end of my explanation to this. Is there a precise setting to the indicator? Okay, so the indicator is called Sessions by Lux Algo. It is it's not messy, but what you want to do is, depending on what region you're from, you want to make sure that the time set is, you kind of have an understanding of the time sessions, okay, and set it. But usually it would look messy depending on the time frame that you're on. So let's take, for instance, if you're on a smaller time frame like this, it's definitely going to look very messy. But when you go to like a higher time frame, it would look like this as well. So you don't want to use it on the higher time frame most times. You want to use it from like your 45 minutes. Okay, you want to use it like on the 45 minutes downwards to like the 5 minutes. But it is most likely going to look messy like this. You just need to flow and understand it. But the timing needs to be precise to the timing of your MetaTrader. I say MetaTrader, your trading view. So just make sure that you have it set properly. That's all you need to do. Sorry, this is really not an analysis call. Okay, this is really not an analysis call, but I'm looking to short the EU and the GU. What you need to do is follow Valetax and go tomorrow morning on the Valetax YouTube page and watch my market outlook, which is our analysis outlook for the week, which is called the next move with Valetax. I have given out a full-blown analysis for Euro USD, XA and XAU USD on how the trades are going to play out for the week. So you can use that as a guiding confluence for your own analysis ahead of the week. And trust me, so far so good. We've had over 85% win rate on those outlooks. Although they are not a trading signal, they're only trade ideas with no guarantee for success, but they would help you, gain clarity if you're having issues with your analysis, and they would also shed more light to things that you might be missing as well. Okay, all you have to do is head to YouTube, type Valetax, and you would see previous outlook analysis that have been posted. And you can also watch them to just kind of see how I predict and speculate the markets too as well. So if you have any further questions, guys, this brings us to our question and answer session. But before that, I just want to tell us to stop undermining the importance of sessions, especially because you're a day trader. If you're a day trader, you need to pay attention to sessions because they're very important. Don't forget to always journal your trades and create a daily checklist, okay, for your entries. So always make sure that before you make an entry, you understand where the direction of the market is, understand where the possible liquidity could be kept, understand where your areas of interest or points of interest are, so that when prices get to these levels during sessions, you can expect that this session should be able to facilitate the movement of prices from that level. Okay, so this brings us to our Q&A session. If you have any questions, please feel free to ask the question so that I or my guest could answer your question. And if you have no questions and you've understood so far this webinar, please feel free to say, I have understood, and just leave something nice in the comment section. I appreciate my guest, I appreciate Valetax, and let me know that you've been following and you've enjoyed the session and you understand completely fine.
Please, when you're holding a trade from London session, and let's say your target hasn't been hit, and New York session comes in, what do you normally do? Do you just take your profits, or you wait for your target to be hit?
So you need to understand, first of all, your target isn't based off the session. Your target is based off the direction of prices overall. So if you took a trade during the London session, for instance, okay, what position were you in the overall direction of the market? Were you in the push phase or were you in the pull phase? So I have two things. A push phase is usually the impulsive direction. A pull phase is usually the retracement or the correction direction. So let's say, for instance, if you were in a market, if you're in a bullish market, okay, and you took a trade here during the London session, there's a most chance that prices is going to continue to trade higher even throughout the New York session. So probably market is going to keep ranging. Market is going to be a bit slow during the London session. But what's going to happen is the New York session is eventually going to bring in the momentum to push the market. Now, this is where the continuation that the New York session brings in comes in. But if, for instance, you were on the pull phase direction of the market, okay? So let's say you were on this direction of the market here, okay? And prices has a point of interest here. And let's assume you were selling during the London session. So this was your entry during the London session here, for instance, and this was Asian sellers too as well. London came in, and then you saw an opportunity probably after a break and retest, and you saw an opportunity to trade during the London session. If your target, for instance, okay, is supposed to be here, let's assume you had no idea there was a point of interest here. Obviously, prices is never going to get to your target because there's a point of interest, which is clearly what a possible order block or a demand area with this sales happening here as a possible point of liquidity. So what's going to happen is you would most likely notice that prices starts to slow down when you're on this trade right before the New York session, trapping in more liquidity and keeping also the Asian liquidity at this level here. Keeping also the Asian liquidity, but also inducing more London liquidity. So what is most likely going to happen is prices would eventually act as if it's coming to your target and then reverse on you. So it is why it's important to know the direction. A lot of times day traders are caught up in this move. So this is most likely like a 15 minutes time frame, but this is a 4-hourly time frame. So if you have a higher time frame POI and you're in the 15 minutes direction without identifying that you're in the correction, which I call the pull phase. Obviously, the push phase, which is here, the push phase is eventually going to take you out of the market. So New York session is most likely going to invalidate your trade. But if you were in this direction from London, then you most likely can still hold your trade. So holding a trade to your target is most importantly to the direction of the market. Okay, so if your target is a short-term target, then let it be short. Okay, and always make sure you're in line with the higher time frame direction. Being a day trader doesn't mean you have to be stupid. It means that you have to be smarter. And that's why day trading is the hardest form of trading and has the lowest success rate. Statistics have it that 95% of day traders are not profitable. And why they are not profitable is because being a day trader, like an intraday trader, like a scalper or trading within the day, requires you to have an immense amount of focus and attention. It requires you to be 10 times smarter than the normal trader. You have a lot of things to pay attention to. You need to look at how the market, is moving and reacting. If the market starts to slow down, you should be concerned. If the market looks like it's starting to range, you should be concerned. All of these things are very important when it comes to day trading. Hence why you don't just play around day trading. Okay, so I hope that answers your question. Okay, someone said your sessions are always fire. I missed your fundamental analysis though. Thanks to Scooby too. Thank you very much, John. My fundamental analysis session is definitely going to be coming back, fully sponsored by Valetax too as well. Got a lot of insight from this all types of Rion, Scooby, and Valetax. Thank you very, very much, guys. I appreciate it. Okay, so I believe we do not have more questions. If we have one, let's see if we can take one more question. Okay, so for EU, someone asked me to give an analysis on EU. So what I'm going to tell you is you want to be selling EU when prices falls right below the 1.16 level. When you get that huge bearish momentum, come into Euro USD and you have a good close under the 1.16 level, start to look for opportunities to sell the EU. When you get GU is most likely going to push into the 1.32 levels. When you get that huge bearish momentum, fall from the 1.32 300 450 levels, please feel free to start to look for opportunities to sell the GU. But as always, I would state you want to find a shift in structure, or like I call it, a change in state of delivery. So you want to see prices start to sell instead of start to buy when they get to that level before you initiate your trade. And that is going to be the simplest way for me to give you an analysis on GU and EU right now. Okay, thank you guys so much for joining this webinar, and I'm glad you enjoyed this webinar. If you did enjoy this webinar, I would really love for you to head to the Valetax website, and all you can really do is create an account with Valetax, register, get verified, and while you're doing that, please also leave a good review. Please also leave a good review about Valetax and how you've been enjoying the webinar thus far. And remember to always share the link of this webinar to your friends and family, so that they can also be a part of this with the next meetings as well. So thank you guys for joining, and until next time.
Please, before you go up there, is this recording going to drop in the group chat?
It's going to be on the Valetax YouTube channel. So if you haven't followed the Valetax YouTube channel, just go to your YouTube, type Valetax, and subscribe to the YouTube channel, and it will be posted on the Valetax YouTube channel.
Okay, thank you very much.
Thank you very, very much. So until next time, I'll see you guys on the webinar. We have an interesting session that is going to be dropping very soon with Valetax. Okay, it's called Valetax, where we're going to be sharing insights. You're going to also be meeting market experts on these calls, where we're going to be sharing our insights on how, you know, trading, how we started trading and how we've been able to get this far, from lots of traders with experience, up to 10, 20, 30 years experience in the foreign exchange market, coming up on the 27th of November. And I would not want you to miss it for anything. So I'm going to, as always, I'm going to send the link and share it out. There's always going to be a promotion on our Facebook channel and our Telegram and everywhere for each and every one of us to join. And before we leave this call, I want to give a big shout out to my guests, Skubi and Elisha. Thank you so much for joining us today, Skubi. Thank you so much for sharing so much knowledge and impact to each and everyone that attended this webinar today. Thank you very much, Skubi. I really do appreciate you making out time. I know it's the weekend, and you know, we probably have a little bit of outings to do and all of those things, but yet you stay to the end.
Yeah,
I really appreciate you. I really appreciate you. Thank you so much, guys. And I'll see you guys on the next webinar with Valetax. And as always, I remain your host, Innocent Ifere Rion. See you guys next time. Cheers.
All right, thank you.